Hello traders, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 27th, 2025, and we are taking a deep dive into the Australian dollar versus the US dollar, or AUDUSD. This pair is at a critical juncture, with a whirlwind of news creating a fascinating and volatile trading environment. First, let's cover the major headlines driving the market before we get into the charts themselves. The biggest news over the weekend is that top officials from the US and China have reportedly agreed on a framework for a trade deal. This is a massive development, as easing trade tensions is typically a significant risk-on signal, which tends to strengthen the Aussie dollar. However, the market is also bracing for a week of extreme volatility, with two other major events on the horizon. We have Australia's quarterly CPI inflation report, which will be the deciding factor for a potential Reserve Bank of Australia rate cut in November. With Australian unemployment recently hitting a four-year high of 4.5%, the pressure is certainly on the RBA to act, which would be bearish for the AUD. On the other side of the pair, the US Federal Reserve is also expected to make its policy decision this week. Softer-than-expected U.S. inflation data has markets pricing in a staggering 98% probability of a rate cut. A Fed rate cut would typically weaken the U.S. dollar, providing a bullish tailwind for AUDUSD. So we have a classic tug-of-war scenario. Positive trade news and a likely Fed cut are bullish, while weakness in the Australian economy and a potential RBA cut are bearish. This fundamental conflict is creating a lot of indecision, which we should be able to see reflected in the price action. Now, let's pull up the daily chart to get the big picture perspective. Looking back over the past year, we can see a clear uptrend that lasted until late September 2025, where the price peaked just above the 0.6930 level. However, that peak marked a significant reversal point for the pair. In early October, we saw a massive sentiment shift, highlighted by a huge bearish candle on October 4th that dropped the price nearly 3%. That single move erased weeks of gains and firmly established a new bearish momentum. Following that dramatic drop, the price has been consolidating and carving out a range. This tells us the initial panic selling has subsided, and the market is now in a state of equilibrium, digesting the conflicting news. The key resistance level to watch on this time frame is the area of that September peak around 0.6930. On the support side, the lows from the October crash established a critical zone between 0.6450 and 0.6480. This range has held for several weeks now, making it a very important battleground for bulls and bears. As long as the price remains below the highs of September, the long-term bias has shifted from bullish to neutral or even bearish. Let's zoom in on the daily chart from September onwards to get a clearer view of this recent reversal. Here you can see the peak we just talked about, followed by a series of lower highs and lower lows, which is the classic definition of a downtrend. The breakdown below 0.68 was the first major warning sign for the bulls. Then came the sharp sell-off in early October, which broke through multiple potential support levels with ease. Since then, you can see the price has been trading in a sideways channel, mostly contained between roughly 0.6470 on the low end and 0.6530 on the high end. This range-bound action perfectly reflects the fundamental uncertainty we discussed earlier. Traders are waiting for one of the major upcoming news events to provide a reason to break out of this consolidation. Any attempt to rally has been quickly sold off, while dips towards the bottom of the range have found buyers. This suggests a buildup of energy, and the eventual breakout from this range is likely to be a very powerful move. To see how the most recent news has impacted the market, let's switch to the 15-minute chart. This gives us a granular view of the price action from the last few trading days. What's immediately obvious is the price gap that occurred at the market open on Sunday, October 26th. The market closed on Friday around 0.6509, but opened on Sunday significantly higher, near 0.6542. This gap up is a direct reaction to the positive US-China trade deal news that broke over the weekend. This is a perfect example of how geopolitical news can instantly reprice an asset. However, what happened next is extremely telling. Despite the bullish gap, sellers immediately stepped in and pushed the price back down. The market not only filled the gap, but continued to sell off, showing a lack of bullish conviction. This failure to sustain the rally suggests that underlying bearish sentiment remains strong, or that traders are hesitant to buy ahead of the CPI and Fed data. The price is now consolidating in the aftermath of that failed rally. This short-term price action reinforces a bearish to neutral bias, as the bulls had a clear catalyst, but failed to maintain control. Okay, let's switch back to the daily chart to recap and discuss potential future scenarios. To summarize, AUDUSD is in a clear consolidation range after a major trend reversal from the 0.69 highs. The fundamental picture is very mixed, creating significant uncertainty. The key price levels to watch are absolutely critical right now. Immediate resistance is the top of the current range, between 0.6535 and 0.6560. This area also aligns with what other analysts are watching. A confirmed daily close above 0.6560 would be the first sign of a bullish breakout. Immediate support is at the bottom of the range, around 0.6470 to 0.6480. A break and close below 0.6470 would signal a continuation of the downtrend. So, what are the likely scenarios? The bearish scenario, which I would place at about a 50% probability, involves a weak Australian CPI print that spooks the market about an RBA rate cut. This would likely cause a breakdown of the 0.6470 support, with initial targets at 0.6450 and then potentially the 0.6415 area. The failure to hold the weekend gap up lends weight to this bearish bias. The bullish scenario, which I see as having a 40% chance, would require the US-China trade deal to progress and the Fed to deliver a dovish rate cut, while Australian inflation data comes in stronger than expected. Under these conditions, a break above 0.6560 could see a quick rally towards the next resistance level around 0.6650. There is a small 10% chance that we remain stuck in this range if the news is mixed and provides no clear direction. The key events to watch are Australia's CPI data this week, followed closely by the Fed's decision and any further headlines from the upcoming Trump-Xi summit. The breakout from this consolidation is coming, and these events will be the catalyst. That's our analysis for AUDUSD today. Thank you for watching Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and consult with a professional before making any investment decisions. Be sure to like and subscribe for more in-depth chart analysis.